It's a revolution in medicine, truly, and the market opportunity. It's projected to blow past $100 billion by 2030.
It really is staggering. We're talking about Eli Lilly versus Novo Nordisk, a true duopoly fighting over metabolic medicine.
Specifically, these GLP-1 drugs that have just completely changed the game for diabetes and maybe even more so for obesity treatment.
Absolutely. You've got Novo Nordisk, NVO, the Danish powerhouse. They were kind of the first movers, established the market. And then you have Eli Lilly, LLY, the American stalwart, coming in strong as the challenger.
And it really centers on their key drugs, doesn't it? Novo Nordisk had the head start with Ozempic and Wegovy. That's based on semaglutide.
Right. But then Lilly came along with Mounjaro and Zepbound using tirzepatide. And the key thing, based on the clinical data we've seen, is that Lilly's molecule just seems to show, well, superior results.
Superior results. That's putting it mildly in some studies. And that perceived edge is really why we're doing this deep dive today, isn't it?
Exactly. NVO has that incumbent advantage. You know, they built the playground. But Lilly seems to have brought a, let's say, more advanced toolkit, plus immense momentum.
So our mission for you, the listener, is to get past the headlines. We want to unpack the strategic advantages, the patents, the R&D pipelines, the financials, and really figure out which of these giants looks better positioned for sustained growth over, say, the next decade.
Let's do it. Where should we start? The market's view.
Yeah, let's start with the market's verdict, because honestly, looking at their stock charts, these companies don't look like traditional big pharma anymore. They look like, I don't know, hyper-growth tech stocks.
That's the perfect way to put it. Investors aren't just looking at current earnings. They're pricing in this massive long-term growth story. It's all fueled by the sheer scale of the global obesity issue. The street has fundamentally re-rated them.
And you really see that re-rating in the numbers. Let's take the last 5 years or so, the S&P 500 index. Solid return, absolutely respectable, around 84.6% total return.
Solid, yes. But compare that to Eli Lilly. LLY's total return over that same time frame, it's frankly astonishing, about 414.4%.
Wow. 400% plus. That's incredible.
Yeah, the share price went from, what, under $170 to over $770? It's been a rocket ship.
Now, Novo Nordisk has also crushed the S&P, let's be clear. Both are elite performers.
Right. NVO hasn't exactly been slouching.
No, not at all. But Lilly's trajectory has just been steeper, more vertical lately.
Okay, so that kind of dramatic performance, that huge run-up, tells us investors are willing to pay a serious premium for future growth. But, you know, a premium like that only makes sense if the company has a strong defense, right? A solid economic moat.
Absolutely. And for pharmaceutical company, that moat really starts with the patent wall. It's the government giving you a temporary monopoly.
So how do Lilly and Novo stack up there when we look at their core multi-billion-dollar drugs?
This is where we see, I think, the first really profound strategic advantage, and it tilts towards Lilly. The gap is significant.
How significant are we talking? Okay, so Eli Lilly's key U.S. patents for tirzepatide, that's Mounjaro and Zepbound, they don't expire until 2036. And some extensions might even push that out to 2039.
2036 to 2039, that's more than a decade of exclusivity in their biggest market.
Exactly. A decade plus of protected high-margin cash flow. That's huge. Now compare that to Novo Nordisk's semaglutide, Ozempic, and Wegovy.
Where do they stand?
Their main U.S. patents are expected to expire much sooner. Think 2031, maybe 2032.
Okay, so that's a difference of what, 5, maybe 8 years?
At least 5 to 8 years shorter runway in the U.S., and maybe even more critical for NVO, they face patent expirations in major international markets like China and Brazil, potentially as early as 2026.
2026, that's practically tomorrow in pharma terms. That 5 to 8 year difference in the U.S. alone, that's an eternity. It must translate into billions in protected revenue. For listeners maybe not deep in finance, why is that NPV, that net present value, so critical here?
Right. NPV is just a way of saying what all those future protected profits are worth today. So when Lilly has 5, 6, 7, 8 extra years of selling its blockbuster drug in the U.S. without generic competition, pulling in those high margins, the present value, the NPV of tirzepatide is just fundamentally higher than semaglutides.
Because semaglutide's protected window closes sooner.
Precisely. That longer runway is a core reason the market gives Lilly that premium valuation we talked about.
Okay, but playing devil's advocate, Novo Nordisk isn't just sitting still, are they? Can't they litigate, maybe buy other companies with newer drugs, or find ways to extend their protection somehow,
Yeah.
mitigate that gap?
Oh, they're absolutely trying, no question. They're pouring money into new formulations, combination drugs like hygrosema. They're trying to build barriers. But, based on what we see today, that risk of earlier generic competition, especially outside the U.S. starting in 26, it's very real for NBO. They're basically fighting against the clock.
Makes sense. Okay, so that's the legal moat, the patent wall. Let's pivot to the technology itself. You mentioned Lilly's current drug, tirzepatide, seems to be superior. How does that actually play out in terms of their R&D leadership? What's the difference?
Yeah, it comes down to the basic science, the mechanism of action. Novo's semaglutide works by targeting one receptor, the GLP-1 receptor. That was revolutionary in itself.
Right.
But Lilly took a different approach. Their tirzepatide is a dual agonist. It hits both the GLP-1 receptor and another one called the GIP receptor. That dual action seems to be the key.
And that dual action led to, well, better results in the clinic, both for blood sugar and for weight loss.
Demonstrably better, yes. The clinical trial data was very clear on that across the board.
And is that translating into doctors actually prescribing it more?
It seems so. We're already seeing Mounjaro, which is Lilly's tirzepatide for diabetes, capture a really dominant share, something like 56% of new prescriptions in that U.S. diabetes GLP-1 space. Doctors and patients are voting with their prescriptions, basically. They perceive it as the better option right now.
Okay, so Lilly has the edge with current tech and the longer patent life. But what about the next generation? That's often the real test of R&D muscle, right? We hear Lilly's working on something called retatrutide, a triagonist.
That's right. And this is fascinating. Strategically, Lilly is actively developing a drug that could potentially make its own current blockbuster, tirzepatide, less relevant or even obsolete down the line.
Why would they do that? Cannibalize their own success? Is that confidence or R&D bravado?
I think it's the hallmark of true technological leadership. It's proactive self-disruption. They know the patent clock is ticking, even on tirzepatide eventually. So the goal is to create the next standard of care before anyone else can even catch up to the current one.
So this triagonist, retatrutide, it targets 3 receptors: GIP, GLP-1, and glucagon.
Correct. And early data suggests it could lead to even greater weight loss and metabolic benefits. They're essentially building the next fortress, while rivals are still trying to figure out how to breach the current one.
And what's Novo Nordisk doing on the next-gen front? You mentioned CagriSema.
Yeah, NVO seems more focused on, let's call it fortification. CagriSema is a combination of their existing semaglutide with another compound. It's about defending and extending their current franchise. The market generally seems to view NVO's next steps as more incremental, maybe less revolutionary compared to Lilly's potential leap with the triagonist.
So NVO's playing defense, Lilly's on offense.
That's a fair summary. Plus, Lilly is also trying to diversify a bit more with things like donanemab for Alzheimer's. That gives them another potential growth engine, a bit of a buffer outside this main GLP-1 battleground.
Okay, wow. The science and the patents seem to lean heavily towards Lilly. Let's see if the financials back that up. Time to shift gears and look at the money, the financial health, the war chests these companies are building.
Well, first off, both companies are incredibly profitable. That's what happens when you have blockbuster patented drugs with huge demand. You have immense pricing power. Novo Nordisk, for instance, reported a gross margin of around 84.7% recently, and just fantastic margins.
84%, yeah, that's elite. But I saw a stat about efficiency, return on equity, ROE. It looked like Lilly had an edge there.
They do seem to. When you look at normalized ROE, the numbers cited for Lilly are somewhere in the range of like 86% to almost 96%, which is just incredible efficiency.
Almost 100% ROE.
Yeah, generating almost $1 of profit for every dollar of equity. NVO's ROE is also excellent, don't get me wrong, closer to 76%, still top tier. But Lilly just appears to be even better at squeezing profits out of the capital they have.
So high profits for both, but maybe slightly more efficient profit generation at Lilly. How does the market translate all this, the patents, the pipeline, the profits, into valuation? We touched on the PE ratios.
Right, and this is where the market's judgment becomes really clear. It seems to be almost punishing Novo Nordisk for those shorter patent timelines and the perceived innovation gap we discussed.
Punishing seems like the right word. Eli Lilly is trading at a trailing price-to-earnings ratio of around 48 times earnings. That's way above the typical pharma average of, what, 2025?
Hugely above average. And then you look at Novo Nordisk. Their PE ratio has compressed. It's down around 15.3 times. That's near or maybe even below the industry average now.
That divergence is massive.
It is, and it's the market explicitly saying we believe more in the durability of Lilly's growth.
So investors are willing to pay that huge 48x premium for Lilly because they have confidence in the whole package.
Yeah.
The better current drug, the longer patent life stretching into the late 2030s, and that potentially revolutionary pipeline with the triagonist.
That's exactly it. The premium is the price of confidence and long-duration protected growth, and conversely, the lower multiple for NVO reflects investor anxiety. Anxiety about those patents expiring sooner, especially internationally, and maybe falling a step behind in the innovation race. It feels like a bet against time for Novo.
Okay, that makes sense. Let's move into the final section here. Risks. Every investment has risks. Is there a big one that both companies share?
Yes, absolutely, and it's a massive operational one. Manufacturing scale-up. Can they actually make enough of these drugs?
The shortages we keep hearing about.
Precisely. The global demand is just tremendous, as they say. It seems almost bottomless right now. Both Lilly and Novo are struggling to build factories and complex supply chains fast enough to meet it. We've had persistent shortages for years now.
So whoever cracks that manufacturing code first gets a huge advantage.
A huge advantage. They could capture massive market share simply by being the one who can consistently supply the product, regardless of anything else. It's an execution race right now, on top of everything else.
Interesting. Now, are there risks specific to one company over the other? Novo Nordisk seems quite focused, maybe too focused?
That's definitely a key risk for NVO concentration. Their business is incredibly reliant on just one area, that diabetes and obesity care segment. It accounts for something like 93.8% of their total sales.
Wow, over 90% from one area.
Yeah, it's extreme focus, which is great when things are booming, but it also means extreme vulnerability. If anything goes wrong in that specific therapeutic area, a sudden safety issue emerges, new regulations hit, or a competitor really leapfrogs them, it could be catastrophic for NVO.
Whereas Lilly, while still heavily invested here, has other things like that Alzheimer's drug, donanemab, providing a bit more of a cushion.
Exactly. A bit more diversification, which can be valuable.
Okay, and finally, the geopolitical risk. Yeah. This feels like a potential wild card, maybe a hidden landmine. You framed it earlier like Lilly built its manufacturing boat in the safe U.S. waters while NVO is exposed to shifting trade winds.
I think that analogy holds up, and it could be a critical structural advantage for Lilly. You hear more and more political talk in the U.S. about reshoring critical supply chains, especially pharmaceuticals. And there have been threats, or at least discussions, about imposing really steep tariffs, maybe even 100% on imported branded drugs.
100% tariff. That would absolutely devastate the economics for any company relying on manufacturing outside the U.S. for the U.S. market.
It would cripple them. And Novo Nordisk, being a Danish company with a lot of its key manufacturing in Denmark, France, other places outside the U.S., they are highly exposed to that risk. A major tariff could make their drugs significantly more expensive, maybe uncompetitive, in their single largest, most profitable market.
And Lilly, meanwhile, has been doing what? Investing domestically.
Aggressively. They've publicly committed over $50 billion just since 2020 to building out their manufacturing footprint right here in the U.S., Indiana, North Carolina, now Texas. Big investments.
So that domestic focus largely shields them from those tariff risks.
It largely insulates them, yes. And it could even make NVO's imported products look much less attractive financially if tariffs were ever imposed. It's more than just supply chain logistics. You could argue it's a really shrewd geopolitical hedge by Lilly.
Okay, let's try to bring this all together. We've covered the patents, the science, the pipeline, the financials, the risks. When you synthesize everything, the picture that emerges based on the source material, seems to point towards a clearer, perhaps more resilient, long-term story for Lilly.
That does seem to be the conclusion, yes. Look, Novo Nordisk is a fantastic company, a world-class innovator that literally created this market. But based on the current evidence, Eli Lilly appears to present a more compelling case for sustainable long-term growth and resilience. Their advantages feel layered, more protected.
So boiling it down, reason number one for Lilly's stronger position seems to be the patent mode. That significantly longer period of exclusivity, stretching well into the 2030s in the U.S. Higher NPV.
Check. Reason number two, technical leadership. They seem to have the superior dual agonist tech right now, and they're aggressively pursuing that next-gen triagonist retatrutide. It's about proactive self-disruption, setting the next standard, not just defending the current one.
Got it. And reason number three, that geopolitical resilience. The massive strategic investment in U.S.-based manufacturing acts as a shield against those tariff and supply chain risks that seem to leave Novo Nordisk more exposed.
Those are the three core pillars, I think. And the market, with that 48x PE for Lilly versus 15x for Novo, seems to be clearly betting on the durability of Lilly's science and that geopolitical hedge.
But, you said it earlier, the race right now might just be about execution.
It absolutely could be.
So here's the final provocative thought for you, the listener, to chew on. What about pure operational strength? We're talking about building massive, incredibly complex factories, scaling production by billions of dollars. In the next, say, 18 months, which company will prove better at just getting the drugs made and delivered, solving those shortages? Could that kind of operational excellence, that manufacturing prowess, actually outweigh the longer-term differences in patents and pipelines, at least for a while?
It's a fascinating question, isn't it? The company that can reliably supply this seemingly insatiable market holds immense power, maybe even enough to overcome perceived scientific or patent disadvantages in the short to medium term. It adds another layer of complexity.
Definitely something to think about. But as always, the final decision on how you weigh these factors, how you value these companies and their risks, that's up to you.
Absolutely. Do your own research.
Well, that wraps up our deep dive into the epic battle for the $100 billion GLP-1 market between Eli Lilly and Novo Nordisk. We hope this analysis gave you some valuable perspective.